All right, perfect. Thank you all very much. Good afternoon, everyone. For some of you, might be good morning. Thank you so much for joining us in today's investor presentation. My name is Shimel Awadi, and I look after brands and communications. Just before we get started, we're just going to take you through the following disclaimer. Just we'll give it a moment that the material has been prepared by NLGIC. General information about our activities currently out of the date of this presentation. Information given does not purport to be complete information of the presentation, including the forecast financial information, should not be considered as advice or recommendation to investors and potential investors in relation to the holding, purchasing, or the sales of security and financial products or instrumental, or does not take into account any particular investment objectives, financial situations and needs, and before acting on any information, and does not take into account any particular information having regard to this matter. Any relevant offer document in particular, you should seek independent financial advice. Presentation may contain forward-looking statements, including statements regarding our intent, belief, or current expectations with respect to NLGIC's businesses and operations, market conditions, results of operations and financial conditions, capital equity, specific provisions and risk management practices. Readers are cautioned not to place, undue reliance on these forward-looking statements. NLGIC does not undertake any obligation to publicly release the result of the revisions to these forward-looking statements to reflect events and circumstances, and after the event hereas to reflect the occurrence of any unanticipated events. With due care has been used in the preparation for the forecast information. Actual results may vary in materially positive to negative manner. Forecasts and hypothetical examples are subject to uncertainty and contingencies outside NLGIC's control. Past performance is not reliable indication of future performance. Now that we have the disclaimer covered, we'll take you through the next slide, which is presenting today's speakers for the presentation today. Our agenda is pretty busy. We're going to be starting with a quick introduction, followed by the brand story. As you guys know, you've probably seen the new brand, reflecting on our Microsoft Teams background and across, different media outlets. We will then be covering the financial highlights and then conclude it with customer day ones and open the floor up for questions. With that, I'll hand it over to our Group CEO, Martin Rueegg, who is going to take us through the introduction. Over to you, Martin.
Perfect. Thank you. Thank you so much, Shema, and good afternoon, everybody. Thanks a lot for joining us. And as Shema mentioned, a lot to cover. But before we going into the financial highlights, which of course are at the core of the presentation and most probably then also have a good Q&A towards the end, we wanted to explain a bit more why we are now all orange. And I hope you have seen the brand reveal 2 days ago, where we shared with the public and the transformation we are heading towards. Again, Dr. Dhafir will give us an update on the integration, what Customer Day One means. Ravi, our new Group CFO, will give us an update on the financials, and also would like to welcome whoever is on the line is Kamran, our new CEO for our Saudi business. Again, that we can cover all the other elements. Adel, who leads our personal lines, is also online with us, together with Ahmed, who is looking after commercial line, and of course Hannah, as our CEO for the Oman business, is with us as well. And Shema will also give us a short update and in the brand story in the details. But before going there, maybe I can set the scene on the next page with why and how did we come up with the brand. So this one, a summary again, who are we, as we call as Liva now, but what is National Life from a legal entity perspective, and we are transitioning into it, is really a strong multi-line, multi-country insurance group, best in class from an RSA perspective, coming together, which has been in operation across many countries in the GCC, but mainly in UAE and Saudi Arabia. But Al Ahliya as well has been a very strong brand within the RSA side, together with health and life from National Life, with Oman and the UAE as the core businesses, but Kuwait and Qatar coming on stream. So really a full GCC, I would say, footprint. And what you saw last year, we worked on the rating, so we have an A- rating confirmed, and the merger of these two groups really built us into and brought us into the top 10 across the GCC players, which by nature, there are not so many pan-GCC players. There are large players in 1 or 2 territories. But again, it put us on the map there, which for us is really the starting point. And Liva is building on the 80 years in the GCC, is really taking the legacy, the heritage from the companies, National Life, as well as RSA, and bring it to the next level, bring it together. We are servicing more than 1.5 million customers across the GCC. And that's where it is really, as I mentioned, the starting point for Liva, where we are really excited. And what we did before we moved into the rebranding, and I summarized it on the next page, we looked into saying we are not just combining the 2 entities, we are not just bringing the countries together. No, we need to be very clear. What is our purpose? Where do we want to go from here? What do we want to stand for? And we redefined the purpose for Liva, which means that's not only National Life, not only RSA, not only Oman, not only Saudi Arabia. It's really for the group, one purpose across all the entities. And what we looked into is the driving element of saying, look, we want to make sure that people, our customers, our partners, can really live their life they want in full confidence, well prepared for the unexpected. So this was very important that it's a short sentence, but there's a lot going into it. What you will see in the way the brand comes alive, the products are rolled out in the months to come, the services are upgraded, and how we change things, it is really there, the element of saying, we want to give you protection. We want to give you the empowerment that you can live life. And when you look at the name Liva, and Shema will explain this shortly, the element of life as an essence, but also protection, are very much core in who we are and what we stand for. So we are not defining ourselves by saying we are insuring you and you have an accident, we pay. No, we empower you. We give you the confidence to live life. So it's like when you put the helmet on, when you go cycling, you're not putting it on just to avoid the scratch on the head. You're putting it on because then you're empowered to do cycling. You can enjoy life. You can explore something new. That's really where our purpose came. And that's where, when you see how we are doing it, we're doing it beyond insurance. We go beyond insurance. We are not just looking at insurance as a risk transfer. We are also looking into services we can provide. We have in our group 45 doctors. We have risk engineers. We have capabilities on IT, which we strongly believe we can go beyond insurance. We own a TPA in the UAE businesses. So that's where we're saying we are going to build and create ecosystems, really environments for our customers and partners where they can get more than just a pure insurance solution from us. And that's all underpinned, because how do you bring it to life with the new values we launched earlier across the group? Again, the same across the group, the same brand across the group, really to have the unity, the strength of coming together, which is agile, to be agile in the way we act. I think COVID taught us a lesson that agility is not just a must. Agility is the differentiator for sustainable success. Acceptive of opinions, acceptive of the environment, acceptive of the changes that are happening. Again, very core to who we believe and how we should behave to make sure that we can really deliver our purpose. Ambitious, yes, we are clearly ambitious. For us, as I mentioned, this is the beginning. There's much more to come. There's more expansion we plan. And Shema again will share in a minute why the brand is selected, because again, the GCC is the beginning of our journey. And at the end of the day, very much in the delivery is accountable. We want to be accountable. We are accountable for all what I just said. This cannot be just words. That goes beyond the word. We are accountable. We will deliver, and we make sure that what we say comes through and comes through. So I wanted to share this briefly in the introduction. I now hand over to Shema that she can guide us a bit through the brand Liva, what it stands for, why did we select Liva as a brand, because I think it's very, very important to get an appreciation where we are today and where we want to go. Back to you, Shema.
Thank you very much, Martin. So before explaining a bit about the meaning behind Liva, when we embarked on the rebranding exercise, we knew exactly where and what we wanted to do in and around the new company. And we wanted to make sure that in establishing the strategy, which was introduced earlier this year, when we embarked on this exercise last year and building together the strategy, we also wanted to make sure that the formation of our new brand isn't just, a reflection of two companies coming together. We didn't want Liva just to be a combination of two companies on its own. We wanted to reinvent ourselves, especially when it comes to this very important transaction and merge of operations. This was, a unique opportunity for us where we wanted to make sure that our new brand name and our new brand identity is a reflection of our purpose and a reflection of the how, and the personality of the brand reflects our value, which is where when you're reading through the purpose and the how, this is where we've taken in inspirations of the naming of the brand itself, that you'll notice in the purpose, live the life they want. And in the design of the logo itself, we also wanted to make sure that it reflects the how, which is creating the beyond insurance ecosystem that has the customer at its core. And in designing and building the identity and the persona of the brand, we wanted to make sure that it is a reflection of our values. Because at the end of the day, we represent the brand, and our values represent how we get things done. So at the very beginning of the exercise, when we, embarked upon, the brand, we wanted to first agree, what do we want to call our new brand? So we looked at several elements together, as a management team and together with the group. And we wanted to make sure that the new name that we would come up with needs to be ownable in the category. We don't want that to sound any similar to any competitors, in the markets that we have today. We wanted to make sure that the name is ownable. We also wanted to make sure that, looking at the strategy on how we want to build our brand visibility, we wanted to make sure that the new brand is easy to say across, different languages. That was a very important point that we wanted to make sure that we tick that. We also wanted to make sure that the name itself is short, simple, easy to say, but it also looks good to the eye. Nothing too, detailed, too complex, and can lend itself to the design of the logo itself so that it can, look appealing to the eye. As well, linking it back to our strategy, we want to enable the growth of our business. In the future, should we wish to expand even further beyond the GCC, we wanted to come up with a name that gives us the ability to expand, our operations in the future should we wish to, but also have that name that really reflects from a regional to an international level. And most importantly, which is what Martin mentioned and myself mentioned earlier on, the brand name needed to communicate the intention, which goes back to our point of our purpose and our how, and the how, living the life well prepared for the unexpected, and by creating the beyond insurance ecosystem that has, you as a customer at the core of it. So that was the first step we needed to do in deciding with the brand name. Then, coming up with the design of the brand, we wanted to come up with, a style and a color that is a middle ground between becoming a regional player and potentially become an international player in the future. And we looked at different, brands that exist, and we wanted to come up with something that not only fits into the category that we are in, but we wanted to design an identity that really stands out and that really shines bright in, from the sea of sameness that we sit on. And we wanted to explore a color that is very different, that is very bold, but at the same time, the color that reflects who we are as a company and where we want to be. So this was, one of the main exercises that we embarked on in the design of the logo, making sure that the design itself reflects the how, which is the insurance ecosystem that has the customer at its core. After that, together with the management team, we wanted to make sure that the personality, the persona of the brand needed to really reflect what we want to be in the future. So it's not just a matter of just designing something nice and pretty and pushing it out to the market. No, we wanted to build an identity that really reflect the confidence, the confidence which goes back to our strategy. We wanted to come up as in an empowering company, empowering brand. We want to become the partner of choice. We want to convey that strong partnership. We want to be human. We don't want to be too, overly jargony. We wanted to become a company that really cares for, for its stakeholders and customers. We want to come across as agile, again, reflecting upon our values. Speaking of insurance ecosystem, we wanted to make sure that we are that one-stop shop for everything that you need, that insurance ecosystem that you need. And we have, we're preparing all these tailored solutions, and we really wanted to come up with a brand that is fresh and friendly and communicates all of that all over in one brand. So in the formation of our new brand, we wanted to take a moment to introduce to you our very first film ad, which is going to go out in the market in the next couple of weeks. And as our very, important stakeholders, you guys will be amongst the first one to see the very first film ad that really tells the story of our new brand in a simple, human matter that really reflects everything that you see in this word crowd. So I'll just take a moment to play the film ad and, enjoy it.
You ever just pause and let certain moments wash over you and think, yep, this is it? Like when you're chasing life like there's nothing weighing you down, or sinking into a quiet bliss among all the noise. Cruising through life's winding paths, calm and confident. You sit back and embrace the unexpected detours, knowing they lead somewhere beautiful. You find something special in the ordinary when every moment feels precious. And you realize that there's nothing better than how good life feels right now. Because life's good when you're covered.
So you might probably wonder, if you haven't come across the press releases, why Liva? Why did we come up with that name? And, allow me to take a moment to explain the meaning behind the name Liva. The word Liva originates from the Old Norse, which means protection, and also means life, which encapsulate exactly what our purpose is all about, which is instilling the confidence in people to live the life they want while prepared for the unexpected. We needed a brand that really communicates that intent and why we exist. Because at the end of the day, Liva is not just a combination of two well-established insurance players. We are the evolution, the next generation of insurance that enhances the life of multifaceted and globally connected community. And this is exactly where we built and came up with the name Liva. Now, looking at the design of the brand itself, why pick the color orange? And, what's with the curve that I am seeing in the logo? So to cover these two very important elements, going back to the exercise that we've done in the brand design, we wanted to come up with, a logo that really reflects the how, which is building that beyond insurance ecosystem that has the customer at its core. So when you see the curve of the design itself, that itself reflects the protection, which also means Liva, it handles the name itself, and the A represents the customer at its core. So building that, protecting customers, as well as building that insurance ecosystem that has you as a customer, letter A, at the core of it all. And as you can see, we wanted to come up with something that's simple, easy to say, that lends its name to the design, but at the same time, it can be a brand that can really grow and really build, itself, in the future itself. And in the choice of color orange, we wanted to pick a color that is not commonly used in the insurance industry. Many of the brands we see uses the color, blue or green, and we wanted to pick a color that is very much consumer retail centric, that really makes us stand apart. And the color orange, as part of the study that we've done, really lends itself to the warmth and building the vibrance and bringing more life to the brand itself. We felt was the right choice into the choosing of, of the brand Diva. Because at the end of the day, it's not just a combination of two companies. We are the evolution and the next generation of the insurance. This is just an example of how Diva would live in English and Arabic, Again, it also reflects Liva للتأمين, on the insurance, in the insurance space. And the narrative that we built in and around Liva is, going back to our strategy. With Liva comes confidence. Confidence in making life choices and exploring all the possibilities ahead, and in seeking what is best for our customers and their family. We want to build that confidence that comes from the right preparation, from the safety net, from security, because the confidence that comes from the knowledge that should you need us, we will always come through. And this is why you will hear us saying, life's good when you're covered, والحياة حلوة وانت بأمن. And that is exactly why and how we've come up with the brand itself. And you'll also notice the film ad itself really reflects the confidence and the good feeling of, adding value to everyday life, and the importance of building that, security and the confidence, because by the end of the day, we're not just we're not just, an insurance company. We aspire to grow beyond that, and we want to build that insurance ecosystem that has you at the center of it all. With that, I will now hand it over to our Group CFO, Ravikanth Petluri, who will take us through our financial highlights. So over to you, Ravi.
Thank you, Faima. Good afternoon, everyone. Shaima, if you can move to the next slide, please. So it's my pleasure to cover the financial highlights for the first half for the group ended 30th June 2023. In terms of the top line gross written premium, the group has increased the top line by 92%, and the overall top line now stands at 182 million riyals for the 6 months ended 30th June 2023. And primarily, the growth has come from UAE medical business, which has increased by 15% in UAE. In terms of the net underwriting income, the overall net underwriting income stands at 19.2 million as of 30th June 2023, representing a significant increase of 109% compared to the corresponding number in 2022. So net underwriting income primarily again coming from the increase of 15% from UAE medical portfolio, and 77% of it was delivered through the M&A activity and the acquisition of RSA Middle East by the group as at 30th June 2022. In terms of the investment income, again, as a result of the optimization strategy that was adopted by the group to optimize the investment portfolio, and also leveraging the current hardening of interest rate in the market, the overall investment income has increased by 161% compared to the investment income that was reflected for the first 6 months of last year, ending 30th June 2022. Despite significant increase in the top line and the investment income for the first half, the group has still reflected a marginal loss of 1.5 million as of 30th June 2023, and this is the loss that is attributable to the equity holders and shareholders of the group. The main reason for the lower growth and loss for the first half ended 30th June 2023 is because of the impact of the integration cost and the expense ratio, which is not currently reflected the overall integration objective that we had, as we are currently going through the integration, and we're expecting the expense ratio to improve once the transformation projects are implemented. Next slide, please, Shine. As some of you might have noted, the group had a pretty tough first quarter, primarily as a result of tough market conditions, which impacted our results in the medical portfolio and the PL motor book. But despite a very, very tough first quarter, where the group reported a loss of 3.2 billion riyals, the group has turned back into profits when we look at the second quarter of results. And this positive movement is something that we are expecting to continue for the rest of the year as well. Overall, the second quarter the group reflected a profit of 1.6 million. This is profit after tax of 1.6 million, primarily as a result of, again, the continued top line growth and a strong investment income that came through in the second quarter of the year. Slide 5. So if you look at the overall portfolio of the group compared to the 2022, as a result of the acquisition, the geographical diversification is getting reflected in the overall portfolio as of 30th June 2023, primarily as a result of the combination and consolidation of the erstwhile RSA businesses, where instead of just operating in UAE, Oman, and Kuwait, which was the situation last year, now the group operates in KSA. In addition to Kuwait, Oman, and UAE, it operates in KSA and enhanced sort of portfolio in UAE and Oman as a result of acquisition of the RSA Middle East. So the position as of 30th June, overall 182 million of the gross written premium is coming from 15% of the portfolio represents KSA, 34% in Oman, where we continue to be the market leaders, and we have further strengthened our position with the as a result of the acquisition of Al Ahliya last year. And in terms of the strategic growth area, UAE continues to be the main focus area for us, in addition to the KSA, where there are significant market opportunities available. And UAE continues to represent 52% and pretty sizable business of the overall gross written premium. China, I can move to the next. Yeah, so in terms of the product and line of business diversification, again, prior to the acquisition of RSA Middle East, the portfolio was pretty much concentrated on the medical book, which represented 87% of the overall premium in the corresponding period last year, compared to the current period where the medical portfolio represents 34% of the overall gross written premium, with an increased 28% coming from the motor portfolio, and non-motor increased from close to 1% in the corresponding period last year to to 16% as at 30th June 2023. And as a result of the overall increase in the other portfolios, the overall life portfolio size, which was 3% earlier, has now increased to 22%. Next slide. Yeah, so that basically brings the financial highlights presentation to end. I'll be happy to take any questions after the overall presentation on the financial performance. So with that, I'll hand it over back to Shaima.
I'll take it, Ravi. Thank you. And maybe we'll start with it's great to be back and share some progress on integration since our last session. We'll have a very quick recap of the journey and some of the milestones that have been achieved, and just to reflect on this 14-month journey that has started with legal day 1, July 7th, 2022, where the transaction of the share swap and the purchase of RSA Middle East was completed. It's been a very steady program with many exciting developments over the past 14 months. Some of the key milestones were obviously the announcement of the leadership in September of last year, moving ahead with focus on developing the business strategy for the combined business, ending the year with the upgraded credit ratings, and the completion of the Ahliya acquisition and of the remaining shareholders, shares. The beginning of the year took us and focus on developing the integration plan. This is a complex transaction. It involves more than 8 regulators, more than 6 geographies, 4 companies. And so it was very important to us that we have a very strong governance structure and with a very strong integration management office in-house that works with subject matter experts and moves across the functions and the business lines. And that was from the beginning, developing the plan, which happened in the earlier part of the year, to the execution across the 13 work streams, which has been in progress for the past 10 months. And so we are now, we had a very important milestone recently, just a few days ago, with the reveal of the new brand. And obviously that symbolizes a very important chapter in the unity of the integration program and working as one. But obviously there are many developments that we will not, in a very few slides share, but there's been a lot of interaction between the teams and the development of integration of people together across these months. Customer day one is our target, and we'll define it in the next slide. It's basically where we believe we have completed all regulatory approvals. We are working under one as one legal entity, offering all our products and services to the market, rebranded to reflect the new values we stand for, offering a unified customer experience. And so basically, this is where integration stops and transformation and strategic initiatives becomes more our focus. And it's also when we have one policies across the board, one systems, staff are all mapped and positioned to their new roles. And for Oman, this is very soon. We are targeting to have this on the 1st of October. The other geographies, we expect it to be a month post that date. Hopefully, this is where we intend to complete the full integration program. This final slide will just give you, so Shema, if you can kindly move, yeah. The final slide just gives you, again, a very high level attempt to capture some of the achievements, but there have been many and a lot, and I think we will start also reaping the fruits as we get into the first quarter of next year. But generally, brand, we discussed some of the synergies my colleague Ravi has alluded to. The revenue synergies coming from investment yields. We see a lot of opportunity for cross-sell opportunities, and that's the whole thesis of this integration. And so that will start to materialize also soon. Cost-wise, we are focused on obviously system synergies, economies of scale, facilities, talents, and this is starting to materialize. Again, it's going to start to show in our numbers more and more as we move to next year. On the IT systems front, we have more than 6 core systems, 15 other internal systems. All have been carefully vetted, selected, and we chose what we believe is the best of both worlds from both legacies. And so not only careful assessment was done, implementation has started, and we're in good shape when it comes to operational readiness. There's a new website being revamped and new apps, which again, the market will get to see as we complete customer day one. We talked about regulatory approvals. We work very close to CMA, who've been very supportive in Oman of the project, and we have had the approvals for the insurance entity in Oman being what used to be Ahliya, and for NLG as a group, Liva today, to act as an investment company down the line as we progress with our strategy. CBU in the Emirates, CBP, we work closely with, and there's very good progress that hopefully will start announcing soon. On the target operating model, people and structure, defining this design of the new structures across the countries at the group level, mapping people, starting to communicate the new leadership across the board has been completed. We have the final stretch of announcing the rest of the staff in their new positions and roles, which again has started and will intensify in the coming days. There has been a very ambitious cultural transformation program that has kicked off and will remain for the next months, where we intend to have the new values and new direction of the company in terms of the training and getting them exposed to the new direction happening again across the board. And on the financial front, I think Ravi has discussed this, and we are working on the consolidation of reporting and policies. More than 50 policy vetted, and by customer day one should have them all unified. We have great team members joining the company, so the continuation of attracting talents. We have training happening across the board when it comes to not just the operations and call center team, but also more than the 50 agents who work closely with both NLG and Ahliya in the past. So this is in a nutshell what we have achieved, and we're very excited to see the value that this integration brings in the coming months ahead. I think I'd better pass the final slide to Martin, maybe to close the session, if that's okay.
Obviously, I'm happy to take it because I like a symphony. But as you heard and what you saw in the brand, in where we are, where we want to go. Again, on one side, clearly, even just going through the integration we are doing, and Dr. Dhafir just shared the results. Ravi highlighted how we really see now the positive uptick in our key markets, in our businesses. I have to say, we are not just a company, and I think we did so many other things and so many things. It's really difficult even to put it on a few slides, but we wanted to make sure that you can get an appreciation of how the national life you knew for many years is now really transforming and becoming Liva and going from there. But with all this, and that's what basically the slide stands for, we are really not just a company, we are a symphony of excellence, and we are set to take together a revolutionizing view on where we want to see today's reality and tomorrow's reality, even so, to make sure that we can bring the change, we can bring the diversification, and playing as a group across the full GCC, investing once, reusing it, making it available, as we said before, to 1.5 million customers. That's where we strongly believe we create an amazing value proposition, and we are really very, very proud on it. I know we have been working very hard on the integration. We have been working very hard, making sure that the company comes together. Markets have been challenging, but at the same time, as we shared with you, the fruit of the labor, of the hard labor, is really coming through, and we are confident by building a strong GCC insurer with the roots in Oman. That's exactly what is the foundation of who we are and where we want to go from here. So that's basically, I think, our presentation. Shema, if I hand over to you to moderate the Q&As maybe for us, and then we can take some of the questions.
Thank you very much, Martin. With that, we're going to open the floors for any questions. So I'm just going to, I think we have a question from Bishan. Bala, over to you.
Hi, good morning, team. How are you?
Very good.
This is Vishen Bhala from Vision Capital. Thank you for the presentation, and congratulations on sort of reaching where you have and achieving all that you have. Wish you all the best for the future with the integration and the new identity. Just a couple of questions. If you could just give us some flavor. I mean, we're aware of national life in Oman and UAE. If you could just give us some sense of the combined ratio on the operating side for some of the other geographies that you've sort of got. So, for example, for Saudi, what are the combined ratios been over the last couple of years?
Sure. Well, thanks a lot for the questions. Again, the Saudi market is a very particular one in itself because it has a lot of volatility, but also a lot of change. I would maybe hand it over to Kamran, who is with us, obviously can give us a bit more insight on the Saudi markets, the dynamics, the key drivers, which is medical and motor. But maybe Kamran, you're much more in the market. If you can give us a short summary, and then also where Al Lamia stands in it, how we are planning to close most probably this year compared to where we are coming from. Kamran, if you can hear us, if you can take it.
Yes, thank you very much, Martin, and thank you, Bishan, for your question. Yes, as Martin said, this market is definitely very unique when it comes to the insurance dynamics. It is by far the largest market in the GCC, predominantly dominated by, of course, medical, which is approximately 60%, and the rest of the lines are about 40%. At present, Alamia, which is the company in Saudi Arabia, do not write medical business, but definitely we are looking into that. For our portfolio, it's predominantly split between personal lines, motor, and commercial lines. Now, on both of these lines of business, Alamia has had a very strong presence over the years when it operated, with the collaboration with RSA, and now with the new partnership with NLG. It is definitely going to positively look to expand its presence in KSA. At the moment, since if we compare our performance from last year to this year, for sure, the overall market has been a bit volatile for companies writing a lot of motor business. It all started off just post-COVID, when the market loss ratios for motor went up for the entire market. This year in particular, it has been very positive. Q1 and Q2 in particular, we will see a lot of recovery, a lot of growth happening in the market, and so is the case for Alamia. Just to give you a perspective, just over since the beginning of the year up to now, we have achieved over a 60% overall growth. If we just look at our motor book, it's been growing very steadily, and is now performing below 100% combined. Moving forward, definitely, there is a huge opportunity right now. Recently the Saudi regulator, if you've just been following the news, there's been a very big initiative to sort of penalize uninsured drivers on the road. So we are expecting that is going to bring a huge influx of business, first of all, for our motor book, and we're all aligned for that. Thanks to a very strong support and very strong network which we have within the group, we are completely geared to tap this opportunity from this market. We're looking at a massive growth expansion over the years. On the PNC side, there is a huge influx of property and construction projects going on in the country. We have recently revamped our underwriting and our distribution teams to work very closely with some of the leading brokers in the market to sort of tap on these opportunities as well. So overall, just to conclude, not to take too much of the time on this question, the situation in KSA is very positive. We've done a turnaround. We've done some corrective actions recently since the beginning of the year, and we're looking at very positive results going forward. Thank you.
Okay, thank you, Kamran, for that answer. So, okay, that gives us some picture on Saudi. If we could then sort of focus on Oman, and we've seen the operating performance, the combined ratio, and I understand the market's challenging. Premiums have been taking a dip up till last year. Combined ratio, if I look at the group level, has been around the 100% level even last year, even pre-integration, and this year it's taken a further sort of deep dive, crossing 100%. And you mentioned part of that is because of the integration process, so it's an interim process. Now, once the integration process is complete, what would be a target combined ratio for the company? Let's say FY24, FY25, more of a general sort of target for the group rather than sort of a P&L number.
Very good. Maybe Ravi, I hand it to you for the more details, but just to give a bit of the context, and Kamran alluded to it, we have quite a dynamic group. So with changes obviously we see in Saudi Arabia, we have quite a different composition of the portfolio, where in Saudi Arabia you write businesses, for example, motor, in the 60 to 70% loss ratios easily, and that's a good loss ratio for Saudi Arabia, acquisition cost and operating expenses being lower. And that's where I would say, well, Ravi can give his early views for where we are heading as a group, but there's a lot of dynamic elements we are still building the group through the integration and the comparison, and you saw it even on the slides, obviously from where we are coming as National Life, integrating the RSA portfolio, and now the growth and the growth outlooks for the next years will shift quite a bit on some of the percentage and the ratios, also the diversification away from medical, which traditionally has higher loss ratios, but then in itself lower expense ratios. So that's where you will see a bit the different composition. But maybe Ravi, if you want to share your view and answer the question.
Yeah, sure. So in terms of the overall combined ratio that we are targeting by end of the year is less than 100%, because we expect, as I said in my presentation, the positive momentum that we have achieved in Q2. And this is primarily coming from the motor book of UAE, where there's been a much faster turnaround compared to what we were anticipating before, and the growth that Kamran just talked about in the KSA, where the overall profit contribution by KSA is much better compared to the previous quarter. So as I said, we're currently working on all the integration pieces, and we are at the same time working on the business plan for next 3 years for the group as well. But to answer specifically to your question, the target for the upcoming year end, 31st December 2023, is to get the combined ratio below 100%. Sorry, Bishan, does that answer your question?
Sorry, I was on mute. Yes, Ravi, you've answered my question. I was saying if somebody else is waiting in line, I can come back, but I had one final question with regards to your investment book. Can I proceed with that?
Sure.
All right, thanks. So, we witnessed, obviously, because of the consolidation, etc., we've seen the investment book grow by 135 million to a total of 250 million as of second quarter end. Now, what we understand of the Omani markets is they have this investment securities law for insurance companies where it has to be 70% fixed income, 30% equity, and then, or I think it's 70% has to be in Oman, 30% can be outside. You have to have some sort of fixed income exposure before you can have equity exposure. There are rules around that with real estate, etc. So is the investment book in tune with that? Have you sought for a time extension to get in line with that? If you could just give us some flavor on that, because that is one of the key drivers for any investment, for any insurance companies. I mean, there's an operating side of the business, but majority of the companies enjoy the float on which they make money as well. So just wanted to understand on your investment book, where do you stand and sort of what's the strategy, what's the discussion with the regulator?
Yeah, sure. Sorry, your voice was breaking up, so I couldn't understand the full question. But I think your question is more on the investment book relating to Oman, or was it the overall group investment book you were talking about?
I'll just quickly repeat it, Ravi. So basically, from the 250 million riyals of what we understand of the insurance law in Oman for investments, is that you have to have 70% in Oman, 30% can be outside Oman. Of that 30%, you first have to have a fixed income exposure in order to have any equity exposure outside Oman. So just wanted to understand if the investment book, because we don't have all the details from your notes, is it in line with the insurance law for Omani companies? Do you have a time frame during which you have to implement this? If you could just give us some sort of insights into that.
Sure. So as far as the Oman investment book is concerned, we're completely adhering to all the local regulations, and we're making sure as a part of the optimization strategy, we're not breaching any of the local regulation, not just in Oman, but also in UAE and KSA, where we do have a sizable investment book, right? So that's one part of it. And as far as the opportunity to sort of invest outside Oman is concerned, right now the strategy continues to be to leverage the current interest rate movement across the geographies that we are operating on, and some of the growth that you've seen in the first 6 months is as a result of the optimization, plus the positive headwinds that we have seen in the market rates, in not just in Oman but also in UAE and KSA. we are basically, the strategy that NLG Group had earlier, as far as its Oman book was concerned, was to continue to invest only in Oman because of the, positive sort of interest rates that were available in Oman compared to the UAE, where, NLG had a pretty sizable presence. But the focus was always to leverage the higher interest rate at a reasonably good quality, where we had, obviously much closer information available, given the fact that, we were operating in Oman, for quite some time. So the current strategy even doesn't involve anything to be invested out of the Oman investment book outside of Oman, primarily as a result of the fact that Oman interest rates and the interest income that we are deriving from the investment book in Oman is up to the expectations and the targets that we have set ourselves for. In fact, our investment income in Oman is actually slightly above the plan that we had.
Okay, that's it from my side, gentlemen. Thank you so much, and wish you all the best. And team,
Thank
not
you.
just gentlemen. Thank you, Shaima.
Thank you.
Thank you very much. I'm just gonna give it a moment to see if anyone has any other questions. You have a question from Nitika. Over to you. Go
Yes,
ahead.
hi. Yeah, hi. Hi, everyone. Thanks for taking my question. I have a very quick one, if I may. So I just wanted to understand your outlook on dividends, given that it was omitted last year, and given that you have gradually returned to profit in the second quarter. What is your outlook there? When do you expect to resume it, this year or next? And what would be the magnitude potentially?
Not sure, Ravi, you want to take the question? Again, I would just set the scene with almost the same statement. We are obviously midst in the integration, the final phase, as Dr. Dhafir just explained, also the legal entity building, making sure the capitalizations and all the elements are there, which finalizes with customer day one. And that's a very important element as a group coming together and as consolidation and having subsidiaries where we have also local shareholders with local dividend streams, which we need to manage. But Ravi, I think if you have a broad answer on our direction from where we are, what we know today.
Yeah. So as I said, I think the clear objective, and we're quite confident to achieve, is to continue the positive momentum that we have seen in Q2 to continue in second half of this year, as well as in the 24 and 25 as well. It's very difficult to sort of predict, when we will resume dividends. But, clearly, I would say that, if we continue and if we achieve our targets that we have set for ourselves, which we have managed to do for the first half of this year, they should be resuming, once we have enough profitable, profits being achieved. At the same time, I think, the regulatory requirements in terms of capital protection, capital solvency is also, one factor that we will have to keep in mind. We are seeing increasingly, higher sort of capital requirements coming through from the local regulators. In addition, as many of the investors might be aware, we will have, we are currently working on implementing IFRS 17, which will affect the numbers by end of this year, as permitted by CMA. We will be publishing our financial statements under IFRS 17, which will impact the numbers that are currently being presented under the previous standard IFRS 4. There will be an impact on equity. However, we're not expecting any significant impact on the profitability. So depending upon the situation, in the current year, but more optimistic about 24 as a full year, because that is when all the remedial action and the optimization and integration, transformation, synergies, etc., that we've talked about are likely to be reflected in our financial performance. And we would expect dividends to commence once we have enough profitable growth and profitability in terms of the bottom line.
Thank you.
Take a moment to see if we have any other questions. I'll check if there's any questions in the chat. All right. If no other questions, then I just wanted to thank you all for attending this meeting, and we look forward from hearing back from you in the future, and we look forward to building together, a multi-line regional insurance giant in the future. Inshallah.
Thank you very much.
Thank you. Thanks, everyone.
Thank you very much for joining us.
Thank you.
Have a wonderful day.
Thank you.
Bye-bye.
Bye.
Bye.
Thanks, everyone.